Well, the US economy may be improving, but it won't be off life support for some time. Despite America's falling unemployment rate, Federal Reserve Chairman Ben Bernanke has signalled that the hard work will only get harder, so the economy will need to help. In what might be considered a perverse response, financial markets rejoiced at the thought of more stimulus. Here's Philip Lasker.
America's obscenely long unemployment lines are getting shorter.
We're getting 250,000 jobs created every month on average now, and you go back 3 or 4 years, they were losing 750,000 jobs per month. So clearly we've come a long way.
Yet America's most powerful banker is a long way from declaring victory.
The better jobs numbers seem somewhat out of sync with the overall pace of economic expansion.
The Federal Reserve Chief suspects we're simply seeing the unwinding of chronic job losses from the depths of the global financial crisis 3 years ago. Getting beyond that will be much tougher as the government starts the post-election task of reining in debt.
Further significant improvements in the unemployment rate will likely require a more rapid expansion of production and demand from consumers and businesses, a process that can be supported by continued accommodative policies.
The suggestion America's central bank will continue supporting growth was enough to temporarily remove concerns about China's slowing economy. Markets around the region were up, with Tokyo rising more than 2% to its highest level in over 8 months.
What I'm a bit puzzled about is the market reaction, that the equity markets rally so much on a comment from the most important central banker in the world saying that we're still pretty sick, we might need some more medicine, and why that's interpreted as good news.
But some see it as a win-win for investors.
If we even get a slow recovery at the same time with plenty of stimulus, that's a reason to see share markets and other risk instruments like the Australian dollar and like gold to keep going higher.
But will plenty of stimulus in the form of zero interest rates and money printing be forthcoming?
I think until we see a significant move lower in US unemployment, and that might be as low as 7% or even 6%, that Ben Bernanke is going to continue to man those pumps.
Certainly if there was evidence that the US economy was falling back into recession, they would do more quantitative easing, but we don't think that's likely.
Perhaps those hoping for more stimulus should be careful what they wish for.